Well, good evening traders from around the world. Thanks for joining me on this Monday afternoon market recap. What we'll do in this video is take a look at the three US indices. We'll begin with the Dow Jones Industrial Average, then have a look at the S&P and also the Nasdaq leading into the trading week of March 2014. What really, and what occurred today anyway, in today's session being Monday, is that we really received quite a bullish signal down here at a support level. Now you can see on my chart, I've got resistance levels drawn in. I also have very strong support levels drawn in, and the market at the moment is really obeying and really acting disciplined around these pivot point levels. This is really good for us because what we've done over the weekend is established what we call bidirectional trade setups. Now all that really means is that we're just waiting for price to confirm which way the market wants to move before we get into those directional trades in our top 12 individual trade list. As you can see on my screen in green, we've got two triggers, one up here around 16,665 and another one down here around 15,968. Until the market breaks up above or down below these triggers, we're remaining very, very neutral here on the market. Here, especially in the way we teach at Pivot Point Trading, this market has the potential to really move into what we call a range-bound market, where we just simply oscillate between support and resistance, right, in a predictable repeating pattern. Or if it wants to, of course, it can completely break out and continue the bullish trend into 2014. Of course, I like the later of the two. I'd love to see this market break out and trend. I think there's a lot of opportunity, which really translates to technology in particular, which is going to be very, very promising and rewarding to trade if in fact these markets do break out. Now, sometimes when you're trading the market, and again this comes with experience, there's times when your analysis is gung-ho one direction, right, during a bullish trend, and there's other times when you simply have to sit on the sidelines and wait for price to give you those compelling signals to actually get involved in the market. Now, where we're trading at the moment is definitely one of those times. We can definitely, or I can anyway, give you the argument for both a bullish and also a bearish movement, but until that actually occurs, it's pretty much pointless in a way. All right, sure, we can get a lot of small oscillations in between these two range periods here, but until we get a significant move outside, there's really not too much to elaborate. If I move on to the individual analysis, however, you can see that we've just got a sideways moving market. We've got crosses going back and forth, really not giving us too much important information. We've got our bearish trigger set below the 100, and it appears to be again bouncing off that buying pressure established from that simple moving average, the 100-day period. If we look into our oscillators now, this is the most concerning thing really leading into any bullish movement higher. Yes, we are at an all-time high on the Dow Jones, which is very, very important to note, and really the oscillators are reflecting that overbought nature. As you can see, the stochastics is moving down. It's giving us a sell signal. The RSI is pretty much neutral, and the MACD is technically anyway telling us that the momentum is is moving to the downside. So we do have a bit of conflicting signals. That's why we have these triggers set and we wait for price to confirm. Moving on anyway, the ADX doesn't like any movement at all. It's sitting down at the signal line. So it's simply saying to us that, well, it's not convinced either way that this market wants to go, right? There's no clear directional movement at the moment, which is reflected in the ADX. And the CCI, it has regained a little bit of strength, but until we break those highs and the signal line is crossed, there's no signal really being generated by the CCI. What I spoke about in Pivot Point Pro as well over the weekend was the fact that if we rally up into resistance and we pull back and fail, then we have what we call a Bollinger Band double top. We'll also have technically a double top on the Dow Jones Industrial Average. Now, this is getting a little bit of ahead of ourselves anyway, but it's definitely a possibility leading in and throughout this trading week, and also rounding out the month of March. So a few things to keep in mind trading these markets. If you're not in any trading positions in any way, if you're unsure of what the market looks to be doing or the way it's acting, it's always good to just stay in cash, right? Cash is a position. And until the market is giving you those definite signals of which direction it wants to move with those high probability trades, then there's no need to actively go out and start looking and searching for trades to place in your own trading accounts. Now let's move to the S&P. Now the S&P has simply broken out of resistance, as you can see, which we did in late February, early March. We've come back, and now we're just simply retesting old resistance as new support. Now this is perfectly textbook. We do have a nice bullish candlestick today being Monday's session, but until we break above the highs around 1,889, this can still simply channel sideways, or at least consolidate short-term sideways before those exponential moving averages catch up, especially the 50, which is really going to be the impetus to drive this price higher. Sure, it can happen in the next few days. It wouldn't surprise me. This is a very strong bullish signal. It's almost what we call a Morningstar reversal pattern where we get two long day candlesticks on the outside with a little spinning top down the bottom. It is a very, very strong technical or candlestick pattern, which a lot of traders use to trade reversals in price movement. So that is technically bullish. We are sitting on the 10 and the 20 and on that support level. So there is a good risk reward setup on this trade. But again, you're sort of battling the fact that these oscillators are overbought. All right, we've got the stochastics cross the RSI neutral, and look at the MACD. We've got that strong sell signal with the histogram still ticking down. So at the moment anyway, really the theme of the market is indecision. And it's really short-term indecision before we get those clear directional breaks above and below the triggers which we have set here. What I'll do now is finish with the Nasdaq. The Nasdaq again continues in its bullish movement. You can see how nice this trend has been as we just continue to make anyway a series of higher highs and higher lows. The retracements during the bearish moves of January haven't been as severe on the Nasdaq. And again, I'm so excited about this 4,394 level. If we break above this, let me just put this into perspective for you. Our next resistance level is really going back to the all-time highs established in 2001, which is right around the 5,100 level. Now, it is 12 years in the past, but these historical resistance levels and all-time highs are definitely going to be great targets if in fact the Nasdaq wants to break out and continue higher. So although everything again is leading bullish, we've got our simples and exponentials supporting the bullish trend. Again, we're still trading in the face of this corrective move in our oscillating indicators. And generally what happens during a trend is that we'll simply sit out here all around like a similar level, and we'll get these what we call gyrations, right? We'll get a volatile period where we'll get bullish days followed by bearish days the next day, followed by again gap ups and gaps downs. Pardon me, that was pretty bad grammar, but the main story and the main picture to take away from that is the fact that we simply move sideways. We grind sideways into these exponentials until the buying pressure comes back in and pushes price higher. So again, just to recap the actual market analysis, we are sitting at a very logical pivot point. We are at a support level. We can either bounce or break down from here, but my hunch is telling me that we're simply going to move sideways for at least this trading week, at least, before we get that clear directional movement either higher or lower. So really thanks a lot for watching this video. If you like the analysis, have a look for yourself, sign up and register. You'll get 8 classes, 90 minutes each, roughly 12 hours of trading content for free, absolutely free. And it'll help you get on your way to autonomous successful trading. So thanks a lot, everyone. Thanks for watching this market video. Give it a thumbs up or even write a comment if you have any questions regarding the individual analysis. All right. Thank you so much. Goodbye.